Hey traders, what's going on? Welcome back to another market outlook from January 24th to about, 5 days later, January 29th. So without any further ado, let's just jump into the market. I know I said from the last market recap, if you haven't checked that out yet, I made sure to take some notes because I'm going to make some adjustments to the way I do the analysis. So I'm just changing the analysis just a bit. You'll see how I do it. You can compare both of them. And then we'll also do another recap at the end of this week so we can see how the development went through. Okay. I actually already have a majority of the pairs already analyzed. The only ones that aren't analyzed are the major pairs, which these major pairs will be sent off into the Telegram. I'm not too sure if I'll be sending all the majors and the minors to the Telegram yet for next week. I still have to set up those minor details. But nonetheless, let's hop into this analysis. So for starters, one thing that's being changed is we're no longer drawing our support and resistance from the 4-hour time frame, but we're going to be drawing them on the daily. I used to do the analysis back in the Telegram, maybe not sure what date, but it's definitely in there where I was giving the daily projections with the support and resistance. So I'm going about it the same way. And I also set up the EA, the TPA EA, the automated trading system, to have these same support and resistances. So it's going to be taking trades from just like we have set up here. We're going to just consider the daily support and resistance, and from the 4-hour, that's where we're going to still look to take our entries from the support and resistance in trend direction. Okay, so here we have our old markings on here. I'm just going to go through and delete this. So let's just mark it up to see what are our relevant areas for now. We have this support down here. We have a resistance at the top. We did meet some resistance right around here. I don't think I have to mark this one in. Let's see. 1, 2, 3, 4, 5 candle touches. I will just leave it as is. I marked off the supreme high and I marked off the supreme low. Actually, I'll just adjust this like this. Okay. And then we have this support zone down at the bottom, which I will take note of. And there's only 5 days in every week. I don't expect the market to progress that much. So there's no need to put lines everywhere and everything just like that. Maybe I would put about 3 to 4 lines just to encase the current price to make sure I can stay there for the reaction of any of those. Also in the Telegram, I will be updating any new zones, any new support and resistances that need to be added in throughout the week, because that's where I'm staying updated with all these. But this can just be a quick visual for my analysis or my thought process on these pairs, these major pairs, as a prep before actually going into next week. Okay, here's we just have these, and the way we always deal with support and resistance is just looking for, let me draw these. We're already headed back to the downside, so we'll see if we run into this zone here. Then we'll look for a rejection to the upside or a continuation to the downside. But nonetheless, we got to look to see how price is dealing with these support and resistances. Are there rejections? Are there retests? Are this consolidation? Is it market structure forming here? These are the things that we look out for, and we'll get more into detail on those when we actually take these trades throughout the week and in the Telegram. So this one's really just so simple where this is how we look for this, and then we'll also be looking at the other pairs where we get a similar expectation. So here for Euro USD, let's remove all the current drawings. Yesterday, Friday, was an indecision candle, pretty small, but then it is bullish nonetheless. The momentum is fading with a strong bullish candle, then a smaller bullish candle. So that's something to just be aware of. We do have the supreme top, always mark that off, and then we have this support zone down below. Relevant areas I want to put in this here for one, because we can see that there has been a little hiccup right here in this area, and then also another hiccup right here. So there's 2 hiccups that we should be on alert for, and if as price runs back up into this area. Another area I want to take note of is this area where we're at now, pretty much just like this. We'll see how price deals with this area from the lower time frame. So if we go into the 4-hour, you can see there's just a lot of consolidation currently at this resistance zone of maybe about 4 or 5 candles, 6 candles or so about a day on the 4-hour time frame. So far we did mildly pop above, pop back below as its support, as the old resistance is testing new support. So we'll just take note of these things. You know, the trend is still forming higher highs from the lower time frames, but from the higher time frames, we did embark on this lower low structure with the previous rejection of this more major support from December 10th, December 9th, right? We're just on alert for these things. If we do pop above, we will be taking a trade to the upside. And then if we do pop below, form bearish structure, we will take a short trade back to the main support down below. Okay, so let's skip on to the next pair, pound USD. So this was the previous trade we took on this. See what relevant zones we have here. So let's look left. Looking left, we have this resistance zone right here actually. If we can just zoom in on it. So I just encased the wicks, and then I moved it over into present day, the future. And we're actually getting a rejection of this right now. So that's something I'm taking note of. And then there is also these, maybe it's better if I use this tool, where we can see that we get some hiccups in this area. We had a break to the bottom, then a break back above, and then also retest of this area. So there is some support and resistance in this area. Price not liking this area ultimately. So I'm going to mark off this area just like this so we can stay aware to see how price will deal with this as the week develops. More so, the only thing that I really have to do for this pair is if the week progresses and we push to the upside, then I will be looking to add a new zone in, which is not really relevant right now. This zone is super old, from about May 2nd, 2018, so about almost 3 years ago. So the older resistance, the more strength it has. So let's skip on to some of the last few pairs here. NZD USD, we were making bearish structure here. So one thing that's predominant along all these XUSD pairs, they're seeming kind of bearish on the structure with a more recent bull run. Okay, let's delete these. We have a resistance at the top, very identifiable, resistance at the supreme top. Then we also have this support level down below. We have this intermediate level down here, which we can see we have a few tests of there, with 1, 2 break and gone through. And we also have this area here. So for that reason, we have this zone. And these are just 4 zones. Price could just stay within these zones for the week. Remember, just 5 days, 5 candles will be produced throughout the week. So nothing much on this. If we go down to the 4-hour time frame, we can get a better view. We're not at any support and resistances yet, so we're not actually looking to take any trades as of this moment. These support and resistances are drawn from the daily time frame, and then the 4-hour will send these trades off. Last 3 USD X pairs. So we go into the other side of the spectrum here, where these ones also did have a bullish run towards the end. We know that the Euro USD and the Pound USD, the Pound itself was really bullish last week, which gave a lot of good trades for us. But if we see the USD CAD, there also was quite a lot of selling pressure on the Canadian last week, which in turn correlation, like we talked about before, correlation, if the Canadian is weak, that would send the USD Canadian up into the sky, which we've seen here with a evening star formation. Okay, so let me just go through, delete all these. Where are relevant zones? We have this one here as the support. We have a supreme top, which I believe, if I'm not mistaken, runs into this zone. And then we have this. And you can see the way I'm drawing these. I'm drawing these on the areas that price has turned away from. Okay, so the reason that price turns away from them is mainly because buyers and sellers. I believe this video where I go through and explain how price moves and everything just like that was actually released last week on this YouTube channel. So there you can check it out, and it's also in the Telegram. Very important video, that one. So here we just have our relevant zones. We can add another zone right here. The reason why I see it being fit to add a zone that I can be looking for is we have one here, we have some consolidation here, and then we have the constant breakthrough. Okay, so this line may just well be let's see our pip distance in between, actually about 60 pips. Let's see what the range is like. I'm okay with that. I'm okay with taking a trade that would come back to the support, hopefully get a rejection of sorts, and if we can get a good risk to reward as well, we can take that trade longwards. Likewise, if we go through with the bearish structure, that's how that would end up turning out. I'm gonna go through and I'm gonna put these on the Telegram, so you can get the good projections for my analysis, how we're expecting to deal with support and resistance based on the price action that forms around that time. Next, we have the USD Swiss. Okay, so going to the daily time frame, we had a bearish push to the downside, rejecting this resistance. And then we have an intermediate zone. Reason it's intermediate, it's not the supreme top, it's not the supreme bottom, but we have multiple issues in this area where I could expect an issue there again. Okay, a lot of people don't learn from their past situations, and for that reason, psychology on the charts, old issue creates new issues in a sense. So then I'm just gonna mark off the supreme low as well, and if we do pop to the upside during the week, then we can go back to this resistance up here at the top, which is the following one. Okay, so just like that, we pop up like this, and there's many different, let me just show you real quick, there's many different scenarios for what price can do. This is why we need to be there for an actual reaction of the market. The way I would go through and draw the support and resistance previously, and I'm going to get more into doing them like this, so you can get a good understanding, is wherever price is, we can go directly there, or price may just find some weakness, may need to gather more energy during that time, go for the pullback, and then continue onward. So ideally that's the same thing if we go from top to bottom. These are the things that we have to be aware of. Okay, how price is moving, what's the momentum of the market, the candlesticks, and the time frame that you're using, because you need to apply top down. Now, last but not least, we have the USD JPY daily time frame. Okay, cool. Where are relevant zones? We have this one. So there's a few things. Definitely the supreme low, and definitely this top here. Let's see. One thing that I'm noticing is, so we have this consolidation period here, and then we also have this here, and then we get a 3 candle rejection of this area here. So that's something I'm taking note of, where I can then place a support right here, interacting with all these zones. Okay, 1, 2, 3, and then we just have the break and back to the upside. And then this would have served as a zone as well. But in this case, I prefer the supreme low. This one's not wrong, but like I mentioned previously, I would not take a trade in between these zones, because there we just have a 10 pip difference, and 10 pips is not what I'm trying to gain or anything like that. So yeah, that's all I really want to say for this video, guys. Use top-down analysis. Make sure you're going from the higher time frames to the lower time. And then I want to wrap this up by just saying that, so this is the way that we use to optimize our trading system in the market, that we use to learn from our mistakes, journal your trades, things, just because I see, not that anything is wrong with the trades, but I prefer to try to send trades to the Telegram in a fashion that would be able to help you. I don't want to just send them all the time, different times, and things just like that, because not everybody's going to be there to take the trade. By me going from drawing the support and resistance from the 4-hour to now drawing them on the daily, less signals will be produced. When you go to the higher time frames, you get more certainty, more reliability on the market information. but nonetheless less trading signals but more reliable signals. Okay, and then there were some other adjustments which I'm making. So there's just a few things that you can do to actually place the odds of success in your favor more. Okay, so that's all I really want to say for this video, guys. Make sure you stay safe, just survive for next week, and journal your trades. Journaling trades is one of the biggest things that you can do. Peace.